Hello, everybody. Welcome to today's live stream. We have a lot to talk about. Firstly, I'm not going to mess about. I'm just going to jump straight into JPMorgan. JPMorgan, obviously, we all know they are an absolute giant when it comes to finance, really. But once again, they're bearish on Bitcoin. They have been bearish on Bitcoin and also generally the stock market for most of this year. But we have done videos previously where we've identified that JP Morgan are actually bearish on Bitcoin, but still buying it at the same time. So no one exactly knows, what their true motivation is. They might just be saying, as they're saying now, stock market is going to drop another 20%. But is that so that they can buy up stocks now and over the next 6 months? We just don't know. But this is the headline. Guys, we're looking at headlines. We just want to understand what are most people doing. And most people are looking at the likes of this MSCI. Global Tech Index has worst month since October 2008. Very, very bad return. And it's the worst, obviously, since 2008, as you can see this little candle down here. So we're not looking very good. Most of the tech stocks are selling off. I do think it's also because of earnings, which I've mentioned to everybody. Obviously, US dollar gets strong. They're not earning as much from foreign companies because these other companies, like from the US or Europe or Australia or anywhere, they have to pay more money to buy the same service, which doesn't really make sense. But we are also seeing that another headline. Excitement for crypto fades as investors pile into bonds. People are uncertain about what to do, what's going to happen. So everybody is buying bonds. Nice, safe, high yield bonds. And this is not good for us crypto heads, but we're seeing it happen naturally. So we do have this little post here. May 29th, 2020, Treasury Directory quarterly website traffic surpassed Ethereum. It's now 1.8 times larger. Very exciting project. Congratulations to the team. Let's go Treasury Directive, which is what crypto channel is ever going to say, hey, let's buy treasuries? I don't think that we should. I think we should be stacking up the likes of Ethereum and Bitcoin at these lower prices. And I know, AJ, you'll probably agree with me, won't you, that we should be buying crypto at the lower prices because this is where the millionaires are made, right?
Yeah, exactly. Close to the bottom of the bear market is where you want to be accumulating all of your Bitcoin, all of your Ethereum, and any other altcoins you want to get into. And then when the bull run comes around, that's when the portfolio explodes.
Exactly. And we genuinely are seeing some movement into this. Just wanted to point this out from Zero Hedge. The Dow Jones, which is the Dow Jones 30 largest industrial stocks on the planet, is officially more volatile than Bitcoin, which is crazy because everyone's like, no, you don't invest in Bitcoin. It's too volatile, blah, blah, blah. It's not a safe store of value. Well, let's invest in the Dow Jones 30 then. Doesn't quite work. But talking about institutional flows of money, here we are. Bitcoin saw $11 million flow into its Bitcoin saw $11 million flow into these funds. I guess is a good, not into itself. Good way to say it is into these funds like others. And so 11 million was into Bitcoin, 2.5 was taken out of Ethereum, and we just saw a lot of money taken out of the other coins. Short Bitcoin was obviously minus 14,000. So it does give us this indication that, in fact, we are seeing a little bit of support for Bitcoin around about these higher levels, which is strange because everyone was like, oh, maybe we're going to 15K. Maybe we're going to 12 or 10K. Maybe that might not be the case anymore. I mean, look, if we're looking at the biggest, should we say, the biggest macroeconomic trends, it does tell us we are going to see a new low. But institutions are slowly dipping their toe. It means they don't mind buying at these prices, which actually is something quite, I guess, a bit of a consolidation or condolence for us as investors, right, AJ?
Yeah, definitely. And for me as well, I don't mind buying Bitcoin at 19,000 again either. To be honest, I didn't even think I'd ever be able to buy Bitcoin at 19,000 again. So yeah, I don't blame them for buying at these prices.
I know. And the thing is, it's only like $11 million, which, for us is
Yeah.
like, what? This guy's 11 mil. Jesus. But for an institution, it's like, okay, what
Nothing.
happened? Yeah,
Absolutely
it's like,
nothing.
yeah. I don't even know if that's on my book or not. Like it's gone. I don't even care. One thing I will notice, or I have noticed, and I will point out, is that we are seeing 24-hour exchange quite relatively, actually, quite high on different exchanges. So net, we are positive, which is a good thing, meaning that ultimately over the next 24 hours, well, I say it's a good thing. It actually might not be a good thing. So if we're seeing Bitcoin moving onto exchanges, this might mean that we're seeing more people sell. And now I think
Yeah.
that's a good thing because AJ and I have always said, well, not always, but over the past, ever since this channel started, that we are going down. And so, I say this is a good thing because I see more Bitcoin balances moving onto exchanges, which ultimately means that people are wanting to sell it. If you don't want to sell it, you just don't put it on an exchange.
Yeah, you
It's
hold it in
either
your cold
already
storage
there.
wallet.
Exactly. It's either already there or you
Yeah,
take it off to keep it stored. So, but putting it back on means you want to sell it
yeah,
from storage. So for me, I think this is actually quite a good thing because we're actually going to, begin to get that whole like, okay, how about we sell our Bitcoin and then we wait till it gets lower and then we buy it, which is what I think is going to be the overarching trend over the next few months. I do think this is going to be the case, especially as we see the Fed rate hike 79% of a 75 basis point hike. Last week it was 54. And guys, I tell you this all the time. Me and AJ, it's not going to be a 50 basis point hike. Who
mm.
who is this? Literally. I don't. Okay, I could be wrong. I really could be wrong, but I don't believe that 20% of people or of analysts, I should say, I just believe that they're wrong, and I don't know how. After everything that all of the Fed, the presidents have said, we've got Mary Bailey coming out saying, "Hey, there's no chance of a Fed U-turn at any point soon." Everybody from the Fed has come out and said, "Look, we are going to continue." And that's why 79% think this, and 20% think a 50 basis point. Either way, there's no U-turn, and we're going to have a pretty aggressive Fed for the next, the end part of the year. Because just to remember, the end Fed fund rate is 4.4. If we get up to 4, and then we get up to 4.25 to 4.5, this is the most likely scenario. And I think this is exactly what's going to happen. So one thing we need to take into consideration is this week, guys, we are having the core inflation rate year over year and the normal inflation rate. This is what everyone looks to. It's the CPI data coming out on Wednesday. Is that Wednesday? No, Thursday.
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 Thursday, yeah.
Yes. So it's Thursday. So core inflation is going up. This is what the Fed look at. The Fed don't look at this because this includes food and also fuel, or like energy. Obviously, we know petrol. No, sorry, not petrol. I'm thinking of like the petrodollar. Basically, oil has become crazy expensive, and then it crashed. Wheat became crazy expensive, and then it crashed. So of course, this food and energy will be coming down, but core inflation, this is what people pay for rent, what they do in their everyday lives. This is going to go up, and still core inflation. Here we go. 5.4, 6.5. This needs to decrease extremely quickly in order for us to actually feel confident. AJ, do you have anything that you want to add on to this to give
Yeah,
us a little bit of a bit of confluence, shall we say, in the rest of the markets?
yeah. So talking about the CPI, which obviously 13th of October, we're going to get that data come out. Now, we've had 9 reports so far this year, and as this tweet says, 7 out of the 9 of those reports that have come out, we have actually seen a bearish reaction within the S&P 500, the traditional market. So the likelihood of it is, we are most likely going to get a bearish reaction from it, just looking at this data here. So for me, it's going to be bearish. I don't know about yourself, Ben.
I actually agree with you. I do think that we
Mhm.
probably will get bearish data
Yeah,
because I see the two different ways. One, we can either come in under expectation but still at growth. I don't think we're going to be coming in under expectation and also at a lesser rate. So if I just quickly bring you back onto this, you can see that no, even economic projections. So core inflation, the previous was 6.3, the forecast is 6.5. So we can come in above 6.5, which is just Armageddon. See you later. Goodbye, market. No more long positions. Anyone who has like a long, good night. See you later. But then there is also the possibility that we come in, let's say, maybe 6.4. But that's still above previous. It's still bad for the market.
Yeah.
So we would say, hey, it was forecast at 6.5. You'll have a small little like relief rally being like, hey, it's under the forecast. But at the end of the day, you're still at a higher than previous level. And so that, I think, will crash the market. So I don't really see too many ways that we could actually be like good for the markets, AJ. That's what I think.
No.
And I brought your screen up here just to kind of like, bring
Yeah.
up the it's just
So
going to
yeah,
be
if we get a bearish reaction to this, then October could be that month that we do actually see the price have that last leg down, and then we do establish that bottom. Because looking at this, this is from Trading Tank, and what he has said is major market bottoms have occurred in October more than any other month. So as we can see from this chart right here, October has had the most market bottoms that has ever occurred, and we are in October right now, so potentially we could see the S&P establish a low and establish its low from the bear market in October. And then maybe for November and December, we could continue to see, we could finally see the price push towards the upside. So this is just a little bit of hope for us that maybe this month we could finally establish that bottom. If we don't establish it this month, then this could continue throughout the rest of the year, this downwards price action. So yeah, that's pretty much all we've got for you there. But taking a look at the charts, the DXY, what we can see with the DXY is that it's continuing to push towards the upside. If you've been watching my previous streams, you will know that I've covered this, and we did form that next higher low right here, and we are seeing that DXY push towards the upside. When we see the DXY push towards the upside, what do we see? We see the traditional markets and the crypto markets push towards the downside. So taking a look at the Nasdaq, we can see that we have had a pullback ever since that DXY formed that next higher low and pushed towards the upside. So that's Nasdaq is pulling down. And as I said in one of my previous live streams, we would most likely find support in this blue area here, because if we go into the daily, we can see this is a major support level. It's been support here, and if we go all the way back here, it's been resistance, support, support, and support. So this level is what is holding up the Nasdaq right now. But yeah, looking at that 1 hour again, I showed you this. We had this bearish megaphone pattern coming into this megaphone pattern, making it a bearish megaphone pattern. And here we got the rejection, and then we saw the price pull back. I do still think if we do break this support level here, then we could come down and test sort of the support at the bottom of the megaphone pattern. And yes, if we break that, the next level we're looking at is the weekly level at $9,753. Of course, that will only happen if we see the DXY continue to push towards the upside. So getting into Bitcoin quickly then, having a look here, we can see that we actually hit the price target of this triangle pattern up here. The price target was approximately 18,930. We actually tested that and touched it pretty much to the dollar down here. As you can see, we've got a wick test of that. That price target was actually hit, and I do still have that short position open, as you can see here, in just over a 20% profit. It was in more of a profit this morning, but we have seen the price actually push towards the upside. If you haven't watched my previous live streams, you will know. You won't know that I opened up this short position. But if you did watch the previous live streams, you will know that I opened up this short position at the top here, because there was a lot of confluence coming in for me that it was a very, very good shorting opportunity. So having a look here, we can see that there was this downtrending resistance here, which we tested literally to the dollar multiple times, and we had a golden pocket for this massive range here as well coming into confluence. So there was 2 bits of confluence for me. Going on to the 4-hour, we also had a horizontal white line here as well. So that's why I opened up that short position, and as you can see, it is paying off. This short position is a really nice, we had a really nice entry on the short position, and it is paying off quite nicely. And what I'm doing now is looking at the shorter time frames to see if we are going to continue to see this push towards the downside. As you can see here, I was looking at this triangle pattern that broke towards the downside, so it was telling me we were going to have a continuation towards the downside. We then formed this bearish pennant here, which broke towards the downside, which was telling me we were going to continue this price action towards the downside. Now, it took a while for us to see that, but initially it did happen. It did happen. The price target hasn't yet been hit. The price target is at $18,700 approximately. We could potentially see that price target be hit. And then what I've been looking at today was actually this potential bear flag here, so a bearish continuation towards the downside, but that did actually break towards the upside. Nothing to be worried about. I still expect the price to move lower if this DXY continues to push, but the DXY is most likely going to have a slight pullback, so it can continue its push towards the upside to potentially form that next high. Now, I don't mean it's going to have a pullback and form another higher low. What I think it would do, is form just a red candle. So on the shorter time frames, everything can reset, and then it can continue to push towards the upside. So for me right now, I am still short on Bitcoin. I am still bearish on Bitcoin until I see any bullish scenarios playing out. And if I do see any bullish scenarios playing out, then I will, of course, bring that to you ASAP. For me, still, we could potentially on Bitcoin have a retest of $19,400 at the POC, which is the point of control. That does tend to act as support and resistance. So I would expect maybe we could see the price come up to here. And if we did come up to there, maybe a rejection. If we did get a rejection from there, from the point of control, then potentially we could see the price come to that target at the value area low at around $18,800. So that's what the technicals are looking like. Maybe a little push towards the upside today and tomorrow, but initially I am still bearish, and I do still think the price is going to come lower. So I am going to continue to hold this trade open. As you can see right here, 20% in a profit. It was almost $800 in a profit this morning, but as I said, the price has been pushing up. So yeah, it's not in as much profit, but I do expect to see more profits off of this trade.
Can I add on to that as well here, AJ?
Yeah.
Because what I want to show you guys is that exactly the same as what AJ has just said. I'm going to add on to this. So we've seen a little bit of the whole, the DXY has moved up in the past couple of days. One of the reasons why I think is because of this uncertainty. So basically, look, if you're a European, let's say you're like I don't know, a big insurance company in Switzerland, Germany, UK, anything, Europe. What you're going to do is you're not going to hold your money in euros if there's a big amount of data coming out. Is the GDP of Europe going to drop by 2%? If it is, then your euros that you're holding are going to go down in value. So what you do is you move your money over to the dollar, hence why the DXY goes up. Now, we had a bit of data coming out of Europe right here. This employment change, this basically was not good enough. So unemployment was lower than what was expected, which is good for us who want all of our friends and family from the UK to have a job. But if you're an investor, you want all of these little guys to not have a job and say, see you later, right? And so then we just look, okay, what else is coming out? So we have a bit of data from the UK. This won't affect the euro because the pound is not, in relation to the euro because they have a different currency. But then we look, okay, what do we have? So we can anticipate the next major bit of data, which this is tomorrow, and then we have the US core inflation. So we could expect the DXY to come down over the course of maybe tomorrow in anticipation for this major bits of, uncertainty in the DXY, because this is going to move the DXY absolutely, whether you like it or not. And so those people who can't necessarily understand whether it's going to go up or down, if they're unsure, they'll just play it safe, move their money to a different currency, maybe the euro, which means that the DXY will go down because people have less dollars, because the dollars have moved to pounds or Japanese yen or euros or anything that's not, going to be impacted by this. So this is typically what's going to happen tomorrow. So this is why I support everything that AJ has just said, in that we might see a little bit of a pump in the DXY, in the likes of other currencies, and therefore a drop in the DXY. But then what do we have after? Towards the end of the week, we have the Chinese Communist Party. There's not really too much going on for the euro area until we get to next week, where we have the ZEW economic sentiment. So this is actually going to be quite a big thing. So we might see towards the end of the week, once we have an understanding as to what core inflation is doing, then people will begin putting money back into the dollar. So we might see Bitcoin, have a little bit of a pump over maybe tomorrow, because people are trying to say, look, stay away from DXY. Let me get myself into either Bitcoin or a different currency. The DXY will go down, and this is why then we will see the likes of the stock market begin to pump. But it won't last for very long, unfortunately. And as you mentioned here, AJ, the overarching lesson is that we're in some bad waters. We really are, because looking long term, the US market is in a bad way, without swearing. It's effed up.
Yeah, it
That's
definitely is.
big.
And the fact that we keep coming down and testing these major support levels on S&P, on the Nasdaq, on Bitcoin, on Ethereum, on all of these assets, these risky assets, the fact that we are coming down and testing the support levels multiple times signals to me that the likelihood of it is that these support levels are going to be broken. I just don't. It's like you knock on a door, and if you keep knocking on it, the likelihood of it, someone is going to finally open up the door, unless no one's inside, obviously. But the likelihood of it is someone is going to open the door, and just like if the price keeps knocking on that support level, the price is most likely going to break through that support level, and once that happens, we will most likely see the price crash. I just want to show something quickly as well that I posted on Twitter this morning. So if you don't follow us on Twitter, click the link in the description and make sure you follow us over there. But volatility is at all-time high and leverage is at all-time volatility is at all-time low and leverage is at all-time high. And this, for me, signals that a big move is coming. Which direction? Of course, we're not going to know. For me, it would be in the yeah. For me, it would be bearish. It would, we would see the price come down, but obviously we cannot we can't just say that the price
can't guarantee that.
Yeah, we can't guarantee that exactly. So we're not sure of the direction. I think downside, and I'm sure Ben agrees with me there. But yeah, so volatility is at an all-time low and leverage is at an all-time high. And for me, I think we're going to see a big move. And for me, it will be a big move towards the downside. So this is just some more data that is signaling to us that we do have that big move coming. Because if we look at the charts, we have been ranging. Let's get on to the 4 hour. We have been ranging for a very long time now, with a slight deviation towards the upside here. But yeah, initially we've been ranging for a very long time. So a big move is sort of rearing up, and I do expect a big move to come soon.
Yeah, I absolutely agree with you. And I think it's just one of those things that, we don't necessarily want to believe it's going to happen, right? But we kind of have to believe that it's going to happen, just purely based on the fact that the charts are not lying to us, and there's so many different people. And okay, I guess there's two kind of sides of thought here. One, AJ, as I'm sure you will be very much aware of is the whole traditional finance. Everyone in the traditional finance world is worried about a recession. Everyone's scared. Everyone's selling. Everyone's jumping ship, right? So just look at a normal hedge fund. Look at anything. Anyone who's been in the markets for a year, 10 years, hundreds of years, they're all selling. They're all scared. They're all jumping to bonds, right? But then you get the crypto heads who are like, nah, I tell you this, yeah, the most risky asset that ever existed is going to be $120,000 by the end of the week, And I'm like, wait, you mean the same asset, right? That's correlated to the Nasdaq 100, yeah, which is down by like 50%. That same asset that's correlated and people are not buying, yeah, that's going to be up by what, 1,000%? Are you sure? Yeah, but crypto's crypto, isn't it? It's different. I don't see it. I just don't see it. And it's a shame. Don't get me wrong, guys, I love Bitcoin as much as the next guy, but I understand it as a financial instrument and it doesn't represent what big institutions need, which is a shame. It is a big shame, isn't it, AJ? Because we love it, but
it's very early stages. It's very early stages.
Yeah, it's not what they need, and so therefore people won't invest in it. And it's a shame, but it is what it is. We don't really have anything to say about it. But yeah, so AJ, just to wrap this up here, if you were to be giving a end of the month target, are you going for a 25 to 30, or are you going for a 15 to 20?
Oof. For me, it's got to be 15 to 20. I'm still looking very bearish. Until we see any bullish signs, I'm not going to get bullish at all. People were getting too bullish last week. And
yeah,
you can
I
see.
thought that was crazy. You see him on Twitter, innit?
Yeah, and all over YouTube, everyone was just getting really too bullish, opening up silly long positions, and obviously now that they've been liquidated, and they probably won't show you that either. So,
no, that's a very good point. Yeah, Bitcoin goes from like 19 to 20, and everyone's like,
yeah.
And
to be honest, for big $1,000, it's not a massive move at all for Bitcoin comparing to where it used to be, just under
5%
70,000.
move.
Yeah, so
like a
it's
5% move on crypto is nothing.
Yeah, and then everyone's getting really excited about it, saying, "Oh, 21,000, and then 25,000 once we break 21,000," and it's just the reality of it is no, we're not ready for that yet. We're still within this bear market. We're still deep within this bear market, and it's not over yet. And there's still potentially more downside as well. So,
do you know what? And that's why you placed a short while everyone else placed a long.
Yeah,
and you know what? You're the one making money, not everybody else.
Yeah.
And unfortunately, a lot of YouTube is just basically, hey, look, we'll just give you a crazy price target because I know you're going to click on my video.
Yeah.
But at the end of the day, we're not going to do that. But we will tell you, look, you're going to lose money unless you go short.
Yeah.
And those people who have followed you have obviously made money, which is great.
Yeah.
But you just don't.
As a trader, it is quite scary as well when you're short against everyone else who's going long. You're looking on YouTube and everyone is going long, and you're seeing all these thumbnails. I am long, bullish on Bitcoin, blah blah blah.
Massive explosion about to happen.
Yeah, you're one of the only ones that's actually shorting now. It is quite a scary feeling because you're against everyone, but as you can see here, it's played off nicely, and I do think we could see the continuation towards the downside. But over today and maybe tomorrow, up until Thursday, I think we could see a little push on the shorter time frames just to reset those indicators and that DXY to sort of reset those indicators as well. But
can you throw up the RSI?
Yeah.
Just yam it up. I know it's okay. All right, yeah.
It's looking on the 4 hour. It was in the oversold territory, so it needs a little reset before we could see. see any
Mate,
more.
everything you say, there's literally an indicator that goes, this guy's chatting the truth.
Yeah,
It was oversold. I think about this. And then you look at like RSI. Okay, yeah. No, actually, yeah, it is oversold. Yeah.
yeah.
This guy's actually on point. Yeah. Fair play.
Yeah, so to be fair, I didn't even look at the RSI today, so I didn't even know. But just seen
Me
someone.
neither.
Are you keeping your short open? For me, I am going to keep my short open. Just to give you a quick understanding, I was going to take profit. I did say I was going to take a bit of profit, but I actually missed the take profit point, and yeah, unfortunately, I didn't actually take any profit. So I was going to take profit at 18,930, but it got down to there, and then we only got a wick test of it. We didn't actually get another test of it, and I missed that wick test of it. So I was going to wait for the next one, but we came close to it, but we didn't actually hit it. So for me, I'm just going to leave this long position open, to be honest with you, until short position open until
I hate longs.
yeah, I hate longs at the moment. Yeah, I'm going to keep this short position open. As you can see right here, it's still open. I'm going to keep it open until I see any bullish indications. And Thursday is going to be a big day for me, and a big day for this short position. I'm probably going to keep it open till Thursday and see what happens, because if we get a bearish reaction, then we're going to see the price drop even more, and this short position is going to continue to print us money. So I'm going to keep this short position open. And there was, for example, there was I had this short position open, and what was it? What's the last thing that came out? Bit of data that came out.
Job report?
Yes, the jobs report. That was it. And I mentioned just before the jobs report, I was saying if we if we get a bullish reaction from it, I will close the short position. But if we get a bearish reaction to it, meaning that we came out with more jobs, then I was going to keep this short position open. So I kept this short position open, and it's the same for Thursday. If we get a bullish reaction, I will close this short position. If we get a bearish reaction, I will keep this short position open and maybe even add to that short position as well. So yeah, I'm going to most likely keep it open till Thursday. DXY is having a small pullback. It is, I already said that, to be fair. We've had a big push towards the upside for the DXY, and a little pullback just to reset those indicators, and then the next push towards the upside. You can see it here. So, for example, let's take this low here. So we formed a higher low from this previous low here, and you can see we don't go up in just green candles. Okay, we go up. We have a red candle, a few green candles, two red candles, and then the next push, two red candles, and then another push. So we've had 4 green candles in a row. We're expecting a red candle, but I still think that we are going to continue to push, continue to have those big green candles towards the upside, forming another higher high on the DXY, which ultimately we will have the risky assets have a pullback. So traditional markets and Bitcoin will have a pullback as well.
Yeah, you're absolutely right. It's exactly what I said earlier about people prepping for the data that comes in. I can even show it again. The data that comes in later on in the week, especially this data coming in on the 13th. So obviously, as you guys will know, on the 13th, that's it's at 4:30 my time. Now, most of you guys know where I live, so 4:30 my time is actually like 8:30 US, New York time, I should say. So this is going to come out while these guys are asleep. This is going to come out before the open. So people need to prepare for this. Hedge funds need to have a hedge against this. So they're going to be buying up a ton of stuff. They're going to be selling a ton of stuff. We're going to expect to see lots of volatility on the 12th, which is tomorrow. So make sure that you're aware of that. And as AJ said here, probably people are going to be like, okay, well, look, if the data comes in that everything is okay, and also we have the FOMC minutes, right? This is from the meeting we had last week. This is just that, what is the Fed going to do? Basically, what I think they're going to do, right? this is what I think. And I'm not going to put my head up my own bumhole, but me and AJ haven't been wrong yet.
Yeah.
So this is clearly what we're looking at. So yeah, the bottom line is everyone's going to be expecting a lot of volatility tomorrow. So watch out for that, guys. Really, really watch out for that. There will be a lot of volatility.
Definitely.
And that's kind of it, really.
What do you think that means? Horse point. Is that what he means? Put some
Uh,
emojis. Rogue.
knight point. Is that? I'm thinking chess, knight, rogue. Drop us a message.
Yeah. Horse point.
Sorry, horse point.
That is a
Nay
pointing
point,
finger, isn't it? So I'm not really sure.
nay finger.
Nay finger.
I mean, later, guys. Oh, all right. Well, sweet then. See you later, Mike. You haven't helped
No.
us.
Anyway, yeah. Thank you very much for watching, guys. Smash that like button if you enjoyed this content and you want us to continue to bring us. You want us to
Oh
continue
no!
bringing you
Sorry.
content.
No. AJ, stop. No.
What's that?
You are an absolute monster. This guy is a devil. Eastern sushi shop. Love. Okay. You absolute monster. I like it though. I like it. We're gonna keep this up, okay?
Yeah, smash a like if you found that funny.
Yeah. Smash the like button. Anyway, guys, look, thank you very much for joining. Obviously, it's great to have you guys here.
Yeah.
We enjoy this type of content. Make sure you like it, smash the like button if you also do. But anyway, yes. Make sure that you're very, very careful. Always use protection. Stop loss, not dirty-minded. And we will make sure that we are here tomorrow. We'll talk you through everything. And also on Thursday, we might go live during the CPI print to give you the exact reaction as to what goes on once we get the CPI print. Thank you very much for watching. Take care.
See you tomorrow, guys.